Do you think money grows on trees? That's a common belief many people hold on to. But the truth about how money is actually created, circulated, and functions in our modern economy is far more fascinating, complex, and essential for you to grasp as a beginner. Today, we'll comprehensively break down money creation processes, the intricacies of the banking system, how the value of money changes over time, and some fundamental investing basics, all delivered in a concise yet thorough 5-minute overview designed for finance newcomers. First, let's explore the origins of money with money creation. Most modern currencies, including the widely used US dollar, operate as fiat money in today's financial systems. This fiat status means their value derives not from backing by a physical commodity such as gold or silver, but primarily from government decree, legal tender designation, and the widespread public trust in the issuing authority. Central banks, exemplified by the Federal Reserve in the US, hold a crucial role in regulating and adjusting the money supply to promote economic stability and growth. These institutions create new money by buying government bonds through open market operations or extending loans to commercial banks, which directly impacts lending rates and stimulates broader economic activity across the nation. Now, transitioning smoothly, let's delve into the banking system, with a focus on the pivotal mechanism of fractional reserve banking that underpins it all. When you make a deposit of cash or transfer funds into your bank account, the institution does not retain the entirety of those funds locked away in secure vaults indefinitely. Regulatory frameworks mandate that banks hold only a small fraction, often referred to as the reserve requirement, while lending out the vast majority to qualified borrowers in need of capital. Through this iterative lending process, an initial deposit expands via the money multiplier effect, generating new money as loans are spent and redeposited into the banking system repeatedly. Thus, your everyday deposits empower banks to extend loans that fuel business expansions, home purchases, and consumer spending, thereby invigorating economic activity and amplifying the total money supply circulating. This intricate system underscores how our personal financial choices, like saving or depositing, are deeply interconnected with the health and dynamics of the entire economy. Moving onward, let's address inflation and the ever-changing value of money, a concept every beginner must understand to protect their finances. Inflation represents the sustained rise in the general price level of goods and services over time, which inversely erodes the purchasing power of currency, allowing you to afford less with each dollar spent. Such price increases occur predominantly when the money supply expands more rapidly than the production of goods and services, creating an imbalance that pushes costs upward across various sectors. Consider a practical example. An everyday item like a loaf of bread that cost just $1 a decade ago could easily cost $2 or more today due to accumulated inflationary pressures. This persistent erosion of purchasing power highlights why uninvested cash steadily loses its real value, diminishing what it can truly buy in terms of goods and lifestyle over the years. Historical inflation charts vividly depict this upward trend, with lines climbing steadily to reveal specific periods of accelerated price growth and their impact on everyday economics. To conclude our core topics, let's briefly cover investing basics, empowering you to make your money grow and outpace inflation effectively. Investing stands out as a primary strategy against inflation, as allocating funds to assets that appreciate faster than price rises helps preserve wealth and build long-term financial security. Popular beginner-friendly investment options encompass stocks for equity growth, bonds for fixed income, and real estate for property appreciation and revenue streams. Stocks grant you ownership stakes in thriving companies, with the potential for substantial value increases as those businesses succeed and expand in competitive markets. Bonds function as loans extended to governments or corporations, delivering predictable interest payments and principal repayment for relatively stable, lower-risk returns. Real estate entails acquiring properties that gain value through market appreciation while also yielding steady rental income from reliable tenants month after month. Additionally, grasp the velocity of money, defined as the frequency with which money circulates through transactions in an economy during a specific time frame. Elevated velocity typically reflects a vibrant, high-activity economy buzzing with frequent exchanges among consumers, businesses, and institutions driving growth. In summary, money transcends mere paper or digits. It serves as a dynamic instrument molded by central banks, commercial lending, inflationary forces, and multifaceted economic interactions. Mastering these foundational elements equips you with the knowledge to navigate finances confidently and craft informed strategies for your economic future. Ultimately, view money as a versatile tool. Wield it with wisdom and intention to construct a stable, prosperous path ahead in your financial journey. If this straightforward breakdown illuminated how money truly operates, please subscribe now for ongoing insights into essential finance and economics topics tailored for beginners.